Afternoon, everyone. It's Chris from Axel as well as solstice.axelatrai.com. You can find us on both websites, on Discord, X, as well as Instagram. Remember, we use this adaptive algorithm for the side market as well as the down market that we are having these days and the up market without being biased. Remember, this is for educational use only. And what I'm going to do is a special video for the coming week. It's going to be a short week. Since this Sunday is Palm Sunday, Friday is Easter, so we'll be off. So it's a short 4-day trading week. We're going to pay attention to the technicals in the overall market and understand the risk involved. That whenever we enter a position, if we are day trading, swing trading, or long-term position, so you understand the difference. Let's go to the first slide that I have up here on the chart. And what I did, I put since 2022. The annual high and the low of 2022 right here. You can see that was the 2022. You can see the 2021 to 2022 lows, the high and low. And in 2023 recovering basically to almost stake out the 2021 highs, but we missed it by a hair. And eventually in 2023 we recovered and continued higher from the 2022, coming back from the 2022 to the 2023, that October lows. We rallied up. We had in 2025, a reset in April, rally back up. And in 2026, we had these three tops up here, and we eventually fell down. I am paying attention to the February of 2024 and 2025 to December highs to see if we're going to get a reset up in this area in order to continue high, or we get a small reversal back up, because on the weekly charts you can see here we had 4-week candles. Usually we get 3-week soldier and a reversal back up, but unfortunately we had a bigger move down. And you can see the most important thing is paying attention to the dollar, because due to the Gulf, the Middle East, what's going on in crude oil, which you can see USO, the VIX, which is the fear and greed. The VXEEM is the option on the VIX in relationship to interest rates, the short term and the long term, and the liquidity that's happening in the market. We got to pay attention to as well the UAE, India, as well as the Asian market, Korea, Japan, and China, because they get their oil from that territory. And at the same time, the DAX, the German, the European, the Poland, and Italian. And I had put the 5SFI, that's the average 5-day moving average, where we usually start to find a bottom in the market. And look at the breadth of the New York Stock Exchange in the last week or so in relationship to the S&P 500, the 11 sectors that are in the S&P, the NASDAQ 5 sectors. Remember, the S&P overweight is weighted on the NASDAQ, because the NASDAQ consists about 38% to 36% of the S&P 500. The small cap, which is the RTY, IWM, IWF, or IWN, the value play, and the Dow Jones Industrial Average, which only represent 30 companies in the overall from the S&P 500. So what the most important thing is understanding the risk in the S&P in the 11 sectors, with the NASDAQ, the semiconductors, as well as the tech. Last but not least, remember to smash the like button, subscribe to the YouTube channel, and you can get in contact with us. It's http://solstice.axelatrai.com, or call us in order to help you understand the risk you are getting yourself into when you are trading these sectors. I'm going to put the S&P here 500. You can see this is the same chart. If I zoom in here and we take the high to this low where the close is, we have on that bar, this is a measuring tool, which gives me a 9.5 reset decline in the overall market. Could it be possible we come back to the December, February, January high where we got this breakout in June, July? You can see that candle that took out and we continued higher. We had the October highs in the December Then eventually we tried to go higher. We couldn't. Now this is considered supply on the weekly chart, and we had that push down. So I'm going to go to the daily chart, and we're going to break it down from the daily chart. You can see on the daily chart the S&P 500, and you can see that nasty Friday push down in the Thursday, because we had the Wednesday tried to go up but couldn't make it to the top. We had the Monday, Tuesday, Wednesday, Thursday, Friday. If we look down, if we draw a downtrend channel from here to here, we broke that downtrend channel. Is there a possibility of a reversal back up because they have a ceasefire in the Middle East for 5 days? Let's see what the outcome is. And we had that small consolidation area here on the S&P 500. If this is going to act as support, if not, we'll look for these two small gaps where the consolidation happened in this area between May, June, and July. This area may be retested if there's going to be continuation and weakness in the market to fill those two gaps. So let's take a look at the NDX. And I wanted to show the NDX here that we have taken, the interest rate, which is the J. Powell announcement, and this was the tariff. And we are below it, and we're coming to that larger consolidate. We had looked up, came back up, looked up, came back up. These are the monthly option expiration. I left them on the charts. Usually I take them off, but I left them on. If you want to know how to take them off, we can go right click in the settings. You can click here where it says option, show price and option interest. You can take them off. The equities, you can do the same, show the volume, or the extended hours, show corporate action. The Forex, you can do the same. The crypto, you can do the same, as well as the futures, show open interest. If I do that, and the equities, the option expiration, highlight, let's see, general, symbols, status, price action, they are marked off. Time axes, option expiration and studies, you can leave them. If I do mark it that way, why isn't it showing? That's on the NDX. Studies, is it in the futures? It's unchecked. It is unchecked. Okay, let's just keep them here. Apply. Let's go right now to the, so we don't waste much time, I'm going to show you the DAX, DAX. And you can see the DAX here is quite sharply have fallen down, and we are in that territory where it's going to fill this gap. This was the April run up. You have this gap here, this consolidation and the breakout. We are coming to that territory. Let's pay attention to it. This will give us a little bit more highlights what's going on in the European zone as well as the UAE. Let's do this. UAE. iShares, there we go. And you can see it is in the same time coming back in. They're going to try to pump more oil. You can see we fell back to this territory and we filled this gap in here. There's a little tiny gap down here which we never filled, and another one down here. Is it possible they can come back to the backside of this channel or create a right shoulder? We have to pay attention to it. Let's take a look at crude oil. Micro CL, and the reason why I want to show the micro CL instead of the CL, because I have a lot of markings on it. You can see that downtrend channel after that 68, 64, we had that push up. We spiked up. We are still in the $100. You can see we're starting to settle in this area. You can see that move, that parabolic move up, but we came down, rallied up, tried to go back down, and we found consolidation here in the last 3 days, and we tried to push up. I am paying attention to that 103. If we're going to touch the upper band of the volume weighted average VWAP, that's the centerpiece, and that's the low piece on crude oil. Let's take a look at right now the TNX, the bond sector. Where is it? TNX. Okay, there we go. We can see the 10-year Treasury notes. We can see that move down, consolidate, try to break up, fell back down, and eventually from that fear since February 28, you can see that spike up in the in the bond par value on the 10-year note. So we have to pay attention to the interest rates. We are coming back to these three levels up here where we looked up, we created that shoulder, that head, and that shoulder, that double, and we eventually fell down. We looked up, came back in. Let's see if this territory, the 61.8, will act as support, if there's going to be continuation to the 78% or eventually fall back into the 50% range on that Treasury notes 10-year. So let's go right now. Take a look at the S&P 500. I'm going to use the micro ES, and what I'm going to do here is narrow it down for everyone on the micro ES and show you how to do the measured moves, the Fibonacci's, and so on and so forth. This you can see from the prior month or so. I had marked this level for the consolidation, and I do have this area where we rallied up from the April. We have this consolidation here, but what I want to do is pay attention to this area if there's going to be continuation to the bottom end or the upside. So what I'm going to do, go to the 10-day 10-day 2-hour chart. You can see my marking was from the prior week. So what we're going to do is activate this Fibonacci, come to the right side. This was done a while back, so we can get rid of it and we can start all over again to show you how to do this. This is the measured move. This is the high for the week from Monday, and this is the low for the week on Friday, which we had the push up, consolidate inside day on Tuesday. Wednesday we tried to look up, but we stayed inside the Tuesday's range. We fell a little bit under the Tuesday's candle, which was negative. Then the Thursday was a sell-off, and Friday was cascade back to the bottom where we reached that level. So what we're going to do is measure this, edit the property. I'm going to go back to January 1st on it. I'm going to go to 1. Okay, this is going to 123. We're going to go to 101. We'll make it 10126, and this is the March, and we're going to change these colors on the weekly to a simple color, which is cyan or a baby blue, and we're going to push OK so everyone can see the extensions to the high and low in case there is going to be continuation to the downside where we can see the minus 25. You know, there's 23%, 50%, 61%. Usually the 80 and 100 usually get a reversal. If there's going to be a reversal up here and create a lower shoulder, we got to pay attention to the 61.8 from the highs and lows to see if there's going to be continuation on the charts on the S&P 500. And what we're going to do is here on the micro ES, we're going to go to a daily chart annual so everyone can see where those fibs are. If I do extend it to the right side, you can see this extension here. It comes back to meet this area of consolidation. If we're going to fall further down, we have the 23% here. I know I used 25 instead of 23, and we have a 38.2, which will meet the bottom end of this chart if there's going to be continuation to the downside. And if there's going to be reversal, I am paying attention to the 23% up here, as well as the 38 and 50 in case we get a reversal, and the 61.8 in case we create a lower high. You can see we are in that downtrend on the S&P 500. Let's do the same thing on the micro NQ, the NASDAQ 100. And you can see in the NASDAQ 100, I did the same thing. We're going to get rid of that measured move, remove the drawing. I had these drawings up here on that downtrend. I'm going to remove those downtrend channels for everyone, remove the drawing. I'm going to keep that open cone from here and open cone from here. We can see we are in an open cone. We came back to the backside of this channel and we broke this consolidation. This was basically the candle that broke out of this area here, and we continued higher. We fell a little further down. So what I'm going to do is go on this chart here to show you the consolidation where we had that double top. We tried to rally, couldn't make it. We lost this double top here. We fell down, tried to rally. We created lower highs, and we are in that downtrend channel. And on Friday was basically a large sell-off, the Thursday, Friday on the NASDAQ 100 due to the tech sector and the semiconductor. So what we're going to do is go to the measuring tool. We're going to go 10-day or 20-day 4-hour. I want to show you the Monday's high to the Friday's low. We're going to measure this from high to the low. We're going to change the color on those charts to make the extensions baby blue, like we did on the cyan. And we're going to, instead of extending it, we're going to extend it to the 25. And I'm going to put it around April. Okay, everyone? 401. I just want to show these levels a little bit more in color so everyone can see these levels on the charts on a daily chart. Let's go back now here from the daily 1 year. And we can see that the zero line is we are here. In case there's going to be a little further cascading and coming down, we got the 25%, the 50%, the 61, the 78, and the 100. We have the 80 as well as the 50 here in case we continue higher or we create a shorter reversal to create a right shoulder up here coming back to where that consolidation was happening. On the NASDAQ 100, you can see this was the Fed, this is the tariff note, and then rally back up. We had a double top here. We eventually created a crab. This is an eye. This is an eye. We couldn't make it up, and we continued lower. So this is very important, these levels for the extensions to the upside. If we continue to the upside, or we can come back down due to the large sell-off on Friday. Let's take a look at the Mag 7, which I have included in the Mag 7. You can see it's an orange. I do have Netflix built in. I added Netflix in there. Let's see how it looks like on the charts. I hope TOS is working. You can see on that that shoulder, that head, this was side action. This is considered a lot of supply. Then we eventually fell down to this area where we're grinding back up. If this area is lost, I'm looking for this gap down here in this pivot to find support on the Magnificent 7, including Netflix. Okay, if I do MAG, M-A-G-S, you can see the MAG does not include Netflix, and you can see that there's a gap here and there's a tiny little gap here on this consolidation. If I do zoom from this area here to the right, you can see that larger gap here, and there's a tiny little gap here. When we pushed up and continued, then we are in that territory. If there's going to be support, it's basically looking for that major area. And if there's going to be a reversal, we'll look for the backside of that chart to reverse back up for us on the Magnificent 7. So last but not least, let's do one more so everyone can understand the breadth. I'm going to use the up volume $ U vol minus the $ D vol. This is the up and down volume. This will show you candles. What I'm going to do is change those candles to show you whenever we have major cascades and movement on the weekly. I'm going to put this on the weekly, and what I'm going to do instead of candles, we're going to make it into a line so everybody can see. Every time we spike below the 1.2, 1.4 million, usually the breadth in here gets exhausted, and we sometimes find a reversal. You can see it happened here in December. It happened here in December the prior year, and it happened here in April. So is there a possibility we're trying to find a bottom? Possible. The most important thing is not being biased. Understand the risk involved if the breadth is getting oversold, and there are institutions, because think of it, the institutions are the turtles, the retail are basically the rabbits that are hopping around trading in between levels. And, get me out of here, when things are cascading and the institutions are taking their time, when everybody's in panic, they are buying on the dips and they selling on the rips. So you have to think like an institution when there is a change in the trend to be ordered to trade these levels. Last but not least, let's go back here. Put the RTY or the IWM. I'm going to use the RTY here. It's going to look like a line. So we're going to change that to candle trend. We can come back here in line and put candle or candle trend. You can see the weekly, the RTY. I have these are point of controls which have not been on a volume profile, never been visited, and I do have a couple on the way back down. But the Russell on the weekly chart, you can see if there's because we're finding some area here, if it's going to come back to this kind of territory where it created the cup, that little handle here, if it's going to fall all the way back to this territory, or is it going to reverse back up? We have to pay attention to it on the daily. So what I'm going to do is go to a daily chart. I know I used RTY instead of the micro ET. You can see here the move up Monday, Tuesday, Wednesday, Thursday, Friday, but still above the double bottom here. And I consider these are double. If there's going to be continuation, I'm paying attention to the backside of the 50% and the 61 and the 28 and the 23 and the 38.2 fib. If there's going to be and if there's going to be a reversal, if I draw a downtrend channel here between the open cone, the low and the high, there's a midpoint here. If I do a drawing line, let's do a line. You can see that there is a line here. I mean, I just do it roughly, a rough estimate. I'm going to activate it so we can activate it, make it a little bit more correct in the center. You can see we just slightly close right under there, more or less. If there's going to be continuation, we'll look for the bottom side of the 38.23 and vice versa coming back up on the small cap. And what I'll do, I'll use the micro 2K to show you how to look at it on a clean chart, because this was the consolidation. You can see I have these level. I said this is the supply. Right now we're kind of finding some kind of support if there is. If not, we'll look for the backside of this breakout here and the backside of this candle here in case we fall further down on the small cap. Last but not least, I'm going to show you how to do the micro. We did the micro 2K. I have the IWM. Let's do this on the 24-day hour. You can see the anchored VWAP. These are anchored VWAP where the midpoint is, and the weekly anchored VWAP for this week from last week, the prior week. You can see the midpoint of it is green, the band on the top is red, and the band on the bottom is purple. And the band for the 2 weeks out, you can see I went back till the 2 weeks out. You can see where my low is on Sunday. Through Friday, I showed the mid band, the upper band, and the lower band. You can see I had these two anchored. If I extend them to the right, edit the property, we can extend them here. Let's go like 10 days out or 15 days so we can have a little bit more anchoring because we got the following month. Let's do that. 4-3, and I'll do the same thing for this one in case we get a reversal. Edit the property, we'll go to 4-3. You can type it in usually if you want. These are just boxes that I did for measurements. So if I take the high and low on the measuring tool and I take this week, the expected move, if there's going to be continuation, would be around here. And if there's going to be a reversal, the expected move would be back up in this territory where that box is. And these are the anchored VWAPs. You can use them from high to the low or the low to the high. I use this weekly. If I come back to this area here, which is the high, this was the Monday high that was on 3-2. I can edit the property to show you how to do it. You can see it here in the settings, so I can go back to 3-2 or 3-1, and you can see the anchoring, how it's set up, where the bottom band should act as support. This one is broken. This was the Friday's band, and this is the weekly band from Sunday. For this week, you got the midpoint, the high and low on it of every week. So this is how you anchor the VWAPs in order to give you support and resistance. And we got two right now. The point of control or the band VWAP are on top of each other, the purple one and the weekly, and from the prior 3 weeks. I just wanted to show this to everyone, and I hope this video was helpful. If you have any questions, once again, please do check us out at solstice.axel.com using the https://. Take care, over and